Okay, done. Live on YouTube, live on LinkedIn. Boom, 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 boom. Hello, Mr. Patil. Good morning, good morning. If you can hear me, just say something. Just give me a yes or something if you can hear me properly. Yeah? And we'll give you the show that you deserve. Okay? Mr. Patil says yes. Mr. Manish Kondhalkar says yes. We are live on LinkedIn as well. We're live on YouTube. We are live. We're gonna begin. I'm sure I'm audible on LinkedIn as well. So let's begin, right? Mr. Kondalkar, please don't delete your messages after you've asked the question. It disorients the person, right? Oh God, you did it again. I won't answer your questions. Anyway, so let's begin. Let us begin. Hello, everybody. Welcome to Thinker's Frequency. We are having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things got a whole lot better. Now we have Thinker's Frequency, our daily dose of insights and analysis which don't lead to paralysis right before we start our day. So let's continue with our journey of reading between the lines things that are especially interesting and important in the world of business and finance. Let's go! And yes, before we go, we all follow a tradition, right? You know the tradition? The tradition of the simultaneous sip. It's sacred. You gotta follow it. And all you need for that simultaneous sip is a cup or mug or glass or tank, a chalice or stein, a canteen jug or flask, or a vessel of any kind. Pour it with your favorite liquid. Today I'm having coffee. Cold. And here we go. Oh my god. Oh my god. Beautiful. Extraordinary. The simultaneous sip says something. It says something really special. It says something really beautiful. You know what it says, like, right? It says that you're not alone. It says that we're in this together. And that starts the day. Unfortunately, we don't have something good to share in the beginning of the day. We'll try to go better as we speak. But yesterday was a very, very sad day for a lot of people. It was just incredibly sad. And once again, it was a Boeing plane which crashed. Interestingly, if you do not know, I wrote a post about it yesterday, just when I read that horrible thing. This is not the first time Boeing has crashed. Boeing lately has been having a history of security lapses, a history of criminal behavior essentially. So now that is not proven because they ended up paying DOJ, protecting themselves from criminal liabilities. Whistleblower complaints had come on Boeing, but two of the whistleblowers who spoke, one of them, he was found dead. And what they were alleging in those blower complaints was that these people are trading off security for faster production. So Boeing has been literally been on a killing spree since 2019, 18, 19. So max crashes, they're called max crashes. One was an Egyptian flight, one was something else. In total, in those two flights, 340 people died. Then the planes, Boeing was put down for some time. Then it had a flurry of cases for on it. FAA was investigating it, but somehow they paid $2.5 billion to DAJ, and a lot of money here and there, due to which all that story was essentially put down, right? And but if you look at 2020 to 2025, there have been like 7 or 8 crashes of Boeing, 6 to 7 easily. 5 I just counted yesterday, right? And in all of those crashes, I mean, you can obviously say a lot of things, but there was one common factor, which was Boeing. And to think of it, why is Boeing like this? I mean, why has Boeing? Because Boeing was essentially a very prestigious company, let's say, as far as the engineering world is considered. They were huge, right? In fact, it's not just these aircrafts. Even on the spaceships, they sent a spaceship, and then they couldn't recover those two uh, astronauts, if you remember. So Starlink had to go and rescue the two astronauts stuck in a Boeing aircraft. I'm sorry, spaceship. So all in all, Boeing has been displaying a serious penchant for incompetence and gross negligence and even criminality, to be honest. Why just stop at incompetence? The question is why, and how is a company like Boeing going in this path? I have an analysis to make on that. I've always believed that as soon as a company stops being a meritocracy, it just falls. It falls flat, and there's no way it can go up. And DEI is that weapon, is that snake which just feeds on the host. It's a parasite which feeds on the host and it ends up killing it. So, Boeing, if you've read Built to Last, Good to Great, Great by Choice, these business books are amongst the top business books that have been written, In Search of Excellence, and then these Built to Last and all. So I read those books as a kid, and in those books, a visionary company, a great company was Boeing. Right? Is this a visionary company? Is this a great company? Of course not. And what changed as the company developed, as the time developed? DEI. When a company stops thinking about how to be better at its job, how to be better at its function, how to be more innovative, how to be more, how to survive, how to grow. Instead of that, when a company starts thinking about how do we have like a gay person on the board or in the team, how do we have a transsexual or a transgender in the team, or how do we represent more women, or how do we get like more blacks or more Mexicans or more Indians or more Asians. So we got to make the company look like a party, you know, a diversity party. And when that happens, it's just it just goes down from there. That's what I personally believe. And that's what has happened with folks like Boeing. And Boeing is not alone in this, right? And now, we have people getting killed left, right, and center. I was just calculating all the crashes that happened and how many people have been killed by Boeing. I mean, because of crashes involving a Boeing plane. The number is close to 1,000 people, in just 6, 7 years. That's weird, to say the least, don't you think? Anyway, so we'll move forward with that. Some Speaking of another weird news, just 1 second, I'll have to put my laptop on charge. Sorry for that technical difficulty. I just noticed that I had forgot to put it on charging. But yeah, so when you're looking at uh, another news, it's that Iran is coming very close. It's moving forward with its plans of nuclear enrichment, which is making a lot of people nervous. So, after IAEA wrap, Iran retaliates with new enrichment facility. And Iran has maintained that it's not building weapons, but that's like everybody knows that's not true, and here's why it's significant. Because the moment Iran gets a nuclear weapon, the whole Middle East equation changes. The defense equation changes. Because if Iran gets a nuclear weapon, Israel won't be able to defend itself. Until now, if you've read books around Israel, so I've read Mossad, I've read Startup Nation, these books written by Israeli, uh, you know, let's say think tanks. So these people mention, and very clearly, that they've been able to fight the Middle East, because Israel is a little country. It's surrounded by 7 nations, and all of those nations have like come together to attack Israel. It's like a 7 nation alliance and stuff, and that has happened multiple times, with Israel. But they've never been able to defeat Israel, or never been able to, and it's a full blown conflict because Israel, is technologically very superior. Interestingly, you might not know this, but Israel has more startups than people. So it's called the startup nation of the world, and it has more startups per people. 1.2 startups per human being in Israel. So it's just next level. But the problem is that if Iran gets a nuclear weapon, Israel's ability to defend itself gets absolutely neutralized, and then the entire Middle East changes, right? Because Israel will get attacked. It's not as if everybody else will just stop when Iran has a nuclear weapon. Israel will get attacked, but if it's not being able to retaliate or defend itself, the entire Middle East, uh, dynamic changes. And when that Middle East dynamic changes, the Western dynamic changes, and when the Western dynamic changes, everything changes essentially. So you're looking at the global world order getting reset with just Iran essentially getting the nuclear weapons. So that's what's happening. And Trump says that Israel will strike Iran, and that's very probable, by the way. So a few days or weeks or months from now, we might just see Israel attacking Iran in a bid to neutralize their, you know, facilities, the nuclear facilities. How does that sound? It's a proper hot war. Already a lot of hot wars are going on in this world, but this one will be of different proportions, essentially. So that's it. US China trade truce. Beijing affirms pact, says both must abide by deal. So they are saying that they're gonna give the rare earths, and US is gonna let the Chinese study, and and the tariffs are gonna go down to 55%. But that's like no win for America, right? Because what about fentanyl? No talks about fentanyl, right? No talks about anything else. I mean, it's just so what you're looking at is essentially things just going back, which means who has the real cards, right? Who has the real cards, and that's saying something. If US doesn't have the cards, how do you expect the global order to evolve as we go? So that's something very interesting. Uh, Moving on, US moves out staff from Iraq amid rising tensions. Oh my god, this is gonna go huge. when Israel attacks Iran, it's not gonna be a limited fight like Israel attacking Gaza. Let me tell you that, because anyone can see uh, things getting weirdly escalating. Army tests Rudrashts. So yesterday, viewers of Thinkers Frequency would know that we talked about drone supremacy and its value, right? We discussed how the country with the most drones should just be declared the winner as far as military power is considered. So India has successfully tested its own set of drones in Rudrashts at Pokhran area, and they say that these drones will actually help aid the operations going away from the front war, because if you remember last time we discussed that it's no longer a front or rear. The chief of air force said that the war of today doesn't have a front or rear, because everything just clashes with everything. We can go anywhere. So the drones in that area. Mr. Yash Pokarna asked, what might have DJT thought before duties on China? Wasn't it a no-brainer from the start? So, Mr. Pokarna, this is a question, but it wasn't a no-brainer actually. In fact, even if you look at it right now, I have a very interesting news to share, which I would have missed if you didn't ask this question. Which means that you should ask more questions, because that leads to quality of conversations improving. So, because of Donald Trump's duties, Team Trump's duties on these companies, General Motors has announced a $4 billion plant in America, and that was supposed to be going to Mexico. So something that was going to Mexico, $4 billion worth of manufacturing, just the capex, not talking about the regular output, throughput, everything, that has been reversed and that has gone to China. And why has that gone to China? Is because of these tariffs, right? So even now, at the moment, US has some tariffs on China, and those tariffs will lead to some movement of industries back to US, which is a win. But when you talk about the macro picture, of course, it's very complicated, right? Even Indian companies are now pitching to the government, talking about diversification from the rare earth mineral case, right? They want to look at Vietnam, they want to look at Austria, they want to look at different countries just so they can be off Chinese dependence. But the time frame that they've mentioned is like 3 to 10 years. So as I always say, it's a long battle, right? And you've got to reverse a lot of missteps which have been happening since 30 years, due to which it wasn't a no-brainer, to answer your question. But yes, China has proved to be harder than even everybody's imagination, which is like saying something, because people already imagine China to be extremely hard, but they've like exceeded expectations even with that, uh, you know. So moving on, Army has actually tested Rudrasht, as we were talking. Drones being developed for cross-border trials conducted at Pokhran. Army looking to acquire drones in significant numbers, because at the end of the day, if you look at Armenia-Azerbaijan conflict, Russia, Ukraine, Israel, Gaza, everything, India, Pakistan, just wars are just fought on drones now, and the country with the most number of drones has basically everything. At the moment, China has developed a mothership of drones. So what they're saying is that they've created a huge aircraft which will shoot drones, swarms of drones like we see in movies, right? So that's something that they've developed, which will be an infinite supply of drones and stuff. So let's see what happens there. China is obviously a different beast, but India going forward should be a good news for the defense sector. As I've said, India needs to invest a lot in defense. A lot in defense, because defense is like nation building, right? When you manufacture defense equipment, you cannot outsource that manufacturing. You're not looking at something cheap only. You're looking at high quality, high reliability, high durability. Pursuing that goal leads to a lot of training of staff, Pursuing that goal leads to a lot of technological advancements, and with those technological advancements come a lot of entrepreneurial activities, and with those entrepreneurial activities, the nation gets built. So, and especially if you're looking at India's defense budget of $80 billion compared to China's defense budget of $250 billion, you can imagine where we are, right? So $80 billion is where India stands, $250 billion is where China stands, $8 billion is where Pakistan stands. However, out of the $80 billion, 50% of our money just goes in maintenance and payments of salaries, right? Straight away. Capital outlay is a very small part of it. Capital outlay is basically 25, $20 billion, right? Just capital outlay, it's the new equipment, the new things, and so on and so forth. And even that, you know, some of that goes to the existing repair and upgradation. The new stuff is just $15 billion, right? And in that $15 billion, a lot of it goes to Atmanirbhar plans, right? Some $12 billion. So at the end of the day, the last $3 billion is what goes to imports. So those $12 billion which are being spent on defense in India right now is everything, and that needs to go up. That needs to go up by a lot, and I expect it to go up actually. You know, so let's hope that happens. If that happens, it could be good for the defense stocks. I'm sure it'll happen actually. I have my hopes high. Moving forward, uh, the saddest part of the whole Boeing operation is when there was a family which was going to London, and this person was actually living alone, you know, and he had arranged everything for their family, and they had a one-way ticket, and that one-way ticket ended with you know, they gave a selfie saying that we are finally going to London. It was a long drawn plan, a lot of years had went by planning for this, and then it crashed the plane. So I was just like reminded of that Woody Allen quote which I love so much. It's like people are often afraid. So it's from Match Point. uh, you know, the quote says, and just hear this out, it's one of the most beautiful quotes, okay? People are often afraid to face how great a part of life is dependent on luck. It's scary to think so much is out of one's control. There are moments in a match when the ball hits the top of the net, and for the split second, it can either go forward or fall back. With a little luck, it goes forward and you win, or maybe it doesn't and you lose. You know? So that was Woody Allen on luck, and which is so true, right? Who would have expected, like, people. Anyway, so Reliance has sold 3.6% of shares in Asian Paints. It's a 17-year-old investment that is coming to fruition. They are basically offloading their shares in Asian Paints. What did I tell you yesterday? Right? What did I tell you yesterday? Does anybody remember what I was talking about yesterday? So if you remember, you will remember that I was talking about how paint shares are getting stressed. And why are the paint shares getting stressed? Because of entry of Grasim, Birlas in the paint business. I was talking about how Asian Paints has fallen down 17% in a long period, and then Berger Paints has been able to hold its ground, but it had fallen. So it has grown 24% in the same period. And with Grasim entering the paint business, the incumbents, majorly Asian Paints, are gonna face a lot of stress. And today, what happened? What happened today? Today, Reliance has sold 3.6% of shares for 7.7 thousand crores. Right? So, when a holder like Reliance looks at a share and says, now there's no room for upside, at least in the near future, you've got to think, right? And this situation is, by the way, pretty similar to what happened when Jio entered the whole telecom play. Obviously, the cases are very different, but they're pretty similar too, which is saying something. So you're looking at a major disruption in the paint market, especially when the industry is not doing well anyway. So again, PhonePe has sold shares of Mapma India worth almost 500 crores, 486 crores in a bulk deal. So interestingly, Mapma India has been started by somebody legendary whom I know, Mr. Rakesh Verma. He's a legend, okay? So Mr. Rakesh Verma founded MapMy India long back. And then the recent controversy around MapMy India was that Mr. Rakesh Verma's son started a new company with MapMy India's funding and support and incubation. But that company wasn't a subsidiary of MapMy India. So that company essentially started independently and they didn't give any stakes to MapMy India. Right? So essentially, a public listed company incubated a new company, invested a lot in it, and then the company just went away, taking a lot of opportunities and prospects away from MapMy India, which led to some serious controversies with the stock and everything, and a lot of problems. And it seems that MapMy India has lost a very big. PhonePe has sold its shares, so perhaps not a great sign of, let's say, optimism for MapMy India at the moment. Indices fall 1% as West Asia simmers, crude prices rise. So a lot of India's activity, financial strength still depends on crude prices, right? And you know why prices rose, right? Viewers of Thinkers Frequency would know. We discussed about this. Do you remember? Do you remember? Tell me you remember. Tell me you remember what happened. What happened was that United States halted their crude oil production for the first time. So with Donald Trump, it was all about drill baby drill, frack, we're gonna be energy independent, we're gonna keep pumping up oil. So US pumping up oil led to global crude prices reduction. As soon as US announced that it's not gonna pump oil uh, or it's halting its production for some time or whatever, crude prices went up, right? So you see how knowledge compounds even in just 19 days. So this is 19th this is the 19th episode, but what we are seeing is so much of knowledge getting compounded and connecting with other things, which is great, very valuable for all of us. Cheers to you. Sorry about that. Moving forward, RBI infuses close to 26,000 crores into the system via bond buyback. Well, we've discussed this. RBI was doing a bond buyback of 25,000 crores, and that bond buyback had a pretty good response in the market. So a lot of people were buying that bond, and it has finally been able to successfully do that. So no news there, but it's a good news because banking industry now has surplus liquidity. Uh, 2.5 lakh crores. 2.5 lakh crores is, again, we're going to do the math, about 12 to 14 billion is 1 lakh crore, right? 24 plus 6, $30 billion. So Indian banking system has now got a surplus liquidity of $30 billion, which means the cutting of the interest rates might just lead to inflation now. Speaking of inflation, inflation is at like the lowest it's ever been, 2.9%. That's absolutely wonderful. Inflation hits 75-month low of 2.8% as in May as the food prices cool down. How cool is that, right? So food prices are cooling down, inflation is low. So with this surplus liquidity and with the interest rate coming down, inflation is going to go a little up, but then growth is going to make up for it, right? So that's the plan. That's the plan of RBI, and we've got to see how it pans out, right? So, so interesting. Anyway, Wall Street draws bigger crowd for riskier loans. Banks selling second lien loans to slash borrowing costs to issuers. So, I'm sure second lien loans, the word must be a bit of a problem. The second lien loan is something called second line lien. I hope I'm not pronouncing it right, because I've just read this, I've not heard it from somebody. So second lien loan is when you buy a loan, you give somebody debt, but then if the company defaults, your stake comes after the first lien lenders. So they get a stake on the defaulted property, let's say an asset. They get the first rights, and after their rights have been fulfilled, that's when you get the rights. right? So it's a very risky play, because if something defaults, then you might not just get anything, right? But Wall Street is drawing a bigger crowd for that, because these risky loans have a higher yield. So a lot of people are still buying these yields. Probably they are seeing that defaults will be cut to minimum, which is saying something. Steel export parity price scheme yet to gain traction. So steel export parity price has yet to take off 2 months after it was launched, because it offers limited grades of commodity and prevailing domestic prices are lower. So a lot of moves going on. If you remember, we were talking about how US has essentially cast a tariff on the steel products from India, steel from India essentially, and India exports some $5 to $6 billion of steel and some $0.86 billion worth aluminium. And since US put on that 25% tariff on Indian steel, and India went to WTO and said, "Hey WTO, US didn't approach you for this, and this is not legal." He said, "No, we this is a national matter. We do not need to go to WTO." So this steel export parity price is something that the government had essentially included for it was to offer export parity rates, but domestic prices are already subdued. So there was not much differential as far as this whole thing is considered. So anyway, moving forward, shares of OMCs fall, upstream oil companies gain on crude rebound. So OMCs are the retail marketers of oil, like Indian Oil and so on, and upstream oil companies are NTPC, ONGC kinds, who mine and refine the crude oil and then give it to people like Indian Oil, BPCL, and so on and so forth. So OMCs are falling, the share price of that, and NTPC and these ONGC guys share price is going up. Why? Because crude price has gone up. So when crude price goes up, the refining guys slightly get greener. But when crude price goes up and the final product of becomes a little expensive for the consumer, the OMCs go down. So oil marketing companies essentially, right? Yeah. So oil marketing companies go down. So it's not a surprise to the viewers of Thinker's Frequency. Okay. Grow has tripled the FY25 PAT to 1.5 crores, 1.8 thousand crores. So Grow is a competitor of Zerodha, which was propped up in 2018. The company was founded as a mutual fund distributor in 2016, but started raising a lot of money in 2018 when it became clear that Zerodha was a money making machine with like 50% net margins, right? So Zerodha was started in 2010, right? So if you look at it, Zerodha has got to be the luckiest company in the whole world, and luck went to good people in the case of Zerodha. So 2010 the company began, right? And from 2010 to 2018, 2018, there was no stockbroker like Zerodha. Not even the incumbents. Angel One didn't come. Angel Broking was the biggest incumbent in this space. They didn't come with the flat fee model of Zerodha, and neither did any VC propped clone. Okay, so for 6 to 8 years, maybe 8 years definitely, Zerodha had a free run without any competition, because angel broking guys thought that this is gonna cut our commission, because they used to be charging commissions per deal, and they had a different business model, right? But these people cut down the commissions to 20 rupees or something. So that wasn't good for angel broking's core business model. But it took them 6 to 8 years to finally make a product in competition with Zerodha. And VCs also were looking at the space, and these people were looking at this company which was growing from 100 to 200 crores in revenue. And 100 crore revenue, it had a 50 crore PAT. From 200 crores to 400 crores in revenue. With my 400 crores, it had a 200 crore PAT. 400 to 800 crore revenue. 800 crore revenue, it had a 50%, 400 crore PAT. From 800 to 1600 crores, from 1000 to 2000 crores, 4000. Now it has an 8 billion, 8000 crore company with a 4000 crore PAT. And then now you are seeing that these people have started getting propped up. So this is as lucky as you can be. Because why did VCs not invest? Perhaps, I shared in an episode of Thinker's Frequency that while reading about Zerodha, so I read a book called No Shortcuts. And in No Shortcuts was Zerodha's story way before Zerodha was actually like definition of cool in the Indian startup ecosystem, right? And it was a big company making a lot of money, but still it wasn't as popular as it is now. So in that, when I read that book, I read Zerodha's earliest blogs. I went to Zerodha's website and I started reading the last, like the first few blogs that they had written, right? I reached 2010, 11. And I found out that in 2010 or 11, Zerodha had mentioned that they are going to raise like $2 million from some Dubai based fund, right? But that didn't happen. So you can imagine that a company like Zerodha was in the market for raising money, but it couldn't raise money or it didn't raise money because the offer wasn't good enough. So you can just imagine. And then no, now why did VCs not invest in anything? Because the market was very small, right? India just had like 1.5 crore traders at that time. So that probably the market, the TAM, SAM, SOM, whatever the, hell these people talk about, that wasn't green enough. And so you can imagine, just imagine how luck shapes up. And Mr. Nitin Kamath is so kind to say that, right? Outcomes in businesses are mostly based on luck. And he's right. He's right. So Center has made a no MDR stance on UPI, which has led to falling down of Paytm stock, and of MobiKwik stock, and a lot of stocks. So viewers of Thinkers Frequency would know that we discussed about how no MDR is bad for UPI business, right? So no MDR is merchant discount rates. That means you make a transaction on UPI and the platform gets a cut. Okay, so the government has these people were hoping, the payment aggregators, and not the payment aggregators, but people like fintech, Paytm, and so on and so forth, that they will finally be allowed to get some MDR, some percentage of transactions. Like when you transact from credit cards or when you transact from every other medium, there's some charge which the bank takes or which these people take, which government hasn't allowed on UPI, right? So these people were hoping now finally we'll get some MDR, but the government says that's a baseless claim. We will not allow any MDR. It's to support the payment ecosystem in the country. Well, what that means is that these people will not be allowed to make money on transactions as far as UPI is considered, because UPI makes like billions upon billions of transactions, right? And no MDR. So these people were hoping that at least for large transactions, there'll be a UPI MDR, but that's not the case. And also the government has taken away some sort of subsidy or incentive to keep the UPI thing, on. So earlier they used to pay some subsidy to the players who were ensuring the transactions happen. It's taken that away. It's maybe UPI or for Rupee, but that the Indian government did. So it's made it less attractive for people to actually provide UPI as a transaction service, right? But still people will provide UPI as a transaction service. You know why? Why would they still provide UPI as a transaction service despite no MDR or despite no incentive, no economic incentive to do it? Well, the case is obvious. Without UPI, nobody would use your app, and without that engagement, you will not be able to cross-sell anything, right? So if you want people to cross-sell, or if you want people to cross-buy something, you'll have to bring them on your app through UPI, through whatever, and then you can probably build some sort of ancillary businesses which can help. India needs more infra to train larger AI models. Well, how to write a news without saying anything? How to say something without saying anything, right? $20 billion is what Amazon plans to spend on data centers in Pennsylvania. You know, Google is buying out more workers. We discussed why Google is firing people. It's just a lot of economic activity happening, and a lot of it sounds very bad to whoever's working a daily job, right? So, uh, Finmin nudges larger CPSEs, that is Central Public Sector Enterprises, to boost capex. So we've discussed this a lot in depth in Thinkers Frequency, where we talk about how capex is very important for national development. Capex, that means capital expense, that means investing in assets for the company, like making roads, making trains, making factories, making so on and so forth. So the government has been, you know, very sad on the fact that there has not been much capex investment from the private sectors. But government spending is essential, or capex spending is essential for the country to grow, or even for the company to survive. I'm sorry, I keep saying company because that's my view of things. I'm just looking at companies, but the country. So it's very important for the country to grow and survive, and the only way to do is a lot of capex. But if you look at the numbers, I've got the numbers for you. The intended capex of private players is expected to decline to 4.9 lakh crore, okay, in this fiscal, from 6.6 lakh crore in 2024 to 2025. So 4.9 lakh, that means 5 lakh crores. 5 lakh crores is 12 times 5, right? 60 billion dollars. But at the same time, Center has set a capex target of 11 lakh crores, right? And it has exceeded its revised targets of 10.8 lakh crores. So Center is trying to make up for the lack of private capex. Now, why are private companies not investing a lot in capex? You can't say that about Adani, because Adani has been the company has been like the champion of capex in Indian private sector, right? All the airports, the ports, a lot of things. But apart from a few groups, why are people not investing in capex in India? It's because they are very skeptic, and they are just looking at it. They're watching money being made. They're keeping that money safe, and they're just looking at the economy. Because if such big companies with such resources are not investing in capex, you've got to ask yourself, where is that pessimism coming from? Like, India is the only growing economy amongst the major economies. It's the fastest growing economy. It's doing so well. Inflation is down. Consumption is a problem. But all in all, it seems to be a good story. Where is the pessimism coming from? Why are private companies not putting in capex? That's a very good question. So the answer to that question will be, what we do at Thinkers Frequency, right? Speaking of consumption, which is the lump in everybody's throat, the government's throat, and everybody, because consumption leads to companies' growth, and it's a virtuous cycle. Rural recovery is on track. Urban uptake may take some time. So urban consumption is still not doing as well, right? So that's something to look at. Probably that's why these companies are not really looking at capex. But government's argument has always been that, hey, if you do not invest in capex, you cannot expect the consumption to go up, because it's a virtuous cycle, right? You invest in capex, a lot of people get jobs. A lot of people get jobs. A lot of people start buying things, and a lot of people start buying things. A lot of people get jobs. So you've got to, and the government can only do so much, right? The government sector has its ceiling. So that's a very interesting conundrum, and I'd love to see a lot more private companies actually putting their pedal to the metal as far as capex is concerned. If not as aggressively as Adani's, at least somebody else, at least Tata's, the semiconductor plants, Assam, Dhulera, everything. So that could be something. EVs to get all incentives, but hybrids will not go unsung. So again, viewers of Thinker's Frequency would know how political this is, right? How political or geopolitical, let's say, this is, because we've discussed a lot about this. Because if EVs become the mainstay of automotive sector, who's gonna win? Who's gonna win, guys? Say it. Who's gonna win if EV becomes the mainstay of automotive industry? Who will win? China. China will win, right? Because they hold the entire value chain. As we just saw, China, Mr. Chirag Patil, congratulations. You get a medal. China will win. It has everything. All the rare earths, 60% of its refining, 90% of its production. They have everything, right? If EVs win, they make the batteries, they make the rare earths, they make everything. They make the magnets. They win. Japan loses, United States loses, only China wins. And what is the world's counter to that? What do you do with that? How can you just let China win with the whole, you know? So you've got to have a counter narrative. So earlier, if you remember, Mr. Nitin Gadkari was talking about green hydrogen. And since the last 6 months, we've not heard anything about green hydrogen. You know? So uh, green hydrogen was supposed to be an alternative, but no, it's not. So we are looking at EVs. Isn't hybrid also doesn't hybrid also have battery in a way that also make China happy? Sure, Mr. Patil, sure, but still, the leverage doesn't directly shift to China because it's the battery stays a core component. However, the dependence on the fossil fuels, maybe you can replace fossil fuels with an ethanol blend or a green hydrogen or whatever. And even then, you can see how diversified that investment becomes. You know, China will be happy, sure, but not that happy. Because with EVs, it's just China and nobody else. Essentially, that's what you're looking at, right? So again, this is a very, very political call that hybrids will not go unsung, and hybrids should not go unsung because these people, Indian automotive sectors, while they were making a presentation about diversification from these, rare earth dependence on China, they're talking about Vietnam, they're talking about Austria, they're giving a 3 to 10 year timeline. Now, who's seen that 3 to 10 year timeline? Nobody's seen 10 years. Whenever somebody gives you a projection of 10 years in the future, just know that person is bullshitting. It's just pure BS. 10 years is too long a period for any kind of forward thinking or analysis. It doesn't make any sense, right? At the moment, we are looking at Chinese supremacy, and there has to be some counter to it, and maybe that counter is hybrid. And if hybrid happens, Japan will be very happy because they've been aggressively pushing against the EVs. They've been very reluctant to join the EV play, and they've been aggressively pushing hybrids in hopes that their market, their strengths are not wasted. With that, speaking of a lot of BSing, somebody did a research and found out that regular exercise is good for brain. Like, did anybody need to do a study where they told us that if you exercise, it's good for cognitive function? We didn't need a research for this, right? No, we did not. We could have just looked around, because brain is a part of the body and exercise will obviously help. But what that research or the study actually ended up saying was that the intensity doesn't matter. So yoga is just as good, dance is just as good, aerobics is just as good when it comes to keeping your brain active and happy. So we are doing a lot of mental exercising as far as Thinker's Frequency is considered. We are all exercising our mind with all this analysis, with all this data, with all this knowledge. But, hope we are working out as well. So, with that, I'll leave you be. It was lovely talking to you all, Mr. Patil, Mr. Kondalkar, Mr. Yash Pokharna, everybody on YouTube and LinkedIn. Uh, Insights and analysis which don't lead to paralysis. 19th episode comes to an end. See you tomorrow. Bye bye. Have a beautiful day at work. Cheers.